Hello, welcome back. I'm with Daisy Jennings-Gray, the Senior Price Analyst over at Benchmark Mineral Intelligence. Daisy, good to see you.
Hi, Peter. Good to see you. Thanks for having me today.
No problem. Kick things off, where are we in terms of, obviously it's been a bit of a interesting year, would say, in lithium pricing. What's the price as it stands at the moment? And maybe you could just run us through the themes of 2023 so far.
Sure, yeah. So lithium prices at the moment are around maybe $37,000, $38,000 per ton for lithium carbonate and lithium hydroxide in the Chinese domestic market. That's kind of roughly where prices have probably been around for the vast majority of the year. It's been a little bit more of a bearish year in the lithium market this year. We started the year with prices trending downwards as a result of kind of a backlog of inventory downstream in the supply chain. So lots of cells, lots of cathode material sat around in the supply chain. And as a result, there's not been as much demand for lithium chemicals. So prices kind of trended downwards for the first quarter. Actually, when they hit around the $30,000 per ton mark, prices started to come back up as a result of those prices being a little bit too low for some of kind of the newer projects in the market. And since then, prices have recovered a little bit to those levels I mentioned at the beginning, and have kind of been coming off slightly in the last few weeks as a result of kind of uncertainty around demand, but a lot more stable than what we saw in 2022.
So 2022, obviously we hit some pretty big highs there as well. What was that? It hit about, hydroxide was about 80,000 per
Yeah,
ton
we
at
hit
one
about
point.
80,000.
So it's a fairly sharp, what's that, 60%
Yeah.
down, essentially. Um, do you think 30,000 is the bottom? Is that sort of the point where, obviously you were talking about there just then that essentially that was about too low. That still seems like a pretty decent price for lithium if you're a producer, right?
Yeah, I think it's quite important to note that for the vast majority of lithium producers, $30,000 a ton is still a very, very good price. It's just what we've seen in the lithium market over the last couple of years. There's a lot of unconventional supply coming to the market, and that's kind of pushed up the upper end of the cost curve. So there are some projects out there now and some lithium supply that costs an awful lot per ton to produce. And as a result, kind of the incentive price for lithium has increased quite a bit over the last couple of years. And that means that when you do hit kind of that $30,000 per ton mark, maybe a little bit lower, kind of mid 20s, a lot of that supply kind of becomes uneconomic and prices kind of rebound back up, which is what we've seen.
Good. What's the size of the lithium market at the moment? And run us through sort of the growth over the last 5 years or so.
Yeah, so I'd say in 2023, benchmarks see the size of the lithium market at around 1 million tons, a little bit below 1 million tons. For comparison, back in 2018, the market was about 300,000 tons. So we've seen quite significant growth in the last 5 years or so. And looking forward to the end of the decade, we see the market growing to about 3 million tons of mine supply. So still very significant growth on the supply side.
Albemarle CEO recently came out and expects a deficit of around 500,000 tons by 2030. Is that something that you think is realistic or something you might agree with?
Yeah, so benchmarks see a similar size deficit, maybe of a little bit over 500,000 tons by the end of the decade. So, although that kind of supply side growth is there, definitely, we still expect that demand is going to outpace that supply.
And I guess the follow on would be, where are we going to be sourcing that lithium from? And I guess how many new lithium mines would be required to sort of actually fill that deficit?
Yeah, so lithium supply traditionally has come from brines in South America and from hard rock in Australia, and to some extent domestic supply in China, both brine and hard rock.
Hmm.
We see that supply diversifying a lot. There's supply due to come online and coming online at the moment in Canada, supply in the US, supply in Europe potentially as well. So there is a lot more supply coming from kind of a more diverse source regionally, but we still need a lot more. So Benchmark has run some analysis on how many mines we need. And if you assume kind of an average capacity of 40,000 tons per year or 45,000 tons per year around that mark, we're anticipating that we need about 74 new lithium mines in that time. That number comes down a little bit if you consider secondary supply, lithium from recycled sources essentially. The number comes down to kind of just below 60. But lithium is still really that constraining factor in terms of how we expect kind of cell capacity and ultimately kind of the electrification of vehicles to kind of move forward. It's that lithium supply that's really restricting that development.
If that's the case, obviously we're in this very tight market with lithium at the moment in itself. But why do you not think we see more of the majors like BHP or Rio Tinto investing more into lithium than say that they do for copper and nickel and their other sort of core metals?
I think the difficulty with lithium is it's not a traditional commodity in the sense that you see with copper and you see with iron. It's more of a specialty chemical. So we have seen some investment from kind of bigger mining majors, but really the challenge is kind of taking the value of that lithium a bit more downstream and producing those kind of battery grade lithium chemicals, the actual product that the cathode manufacturers want. And having the experience and having kind of the knowledge to do that, I think is you know a challenge and a hurdle that some of the mining majors fear that they won't be able to overcome. And also the volatility in pricing, we've spoken about pricing being at 80,000 tons last year and down in kind of the 20s this year. And as a result, I think, not being certain on where the market's going and where margins will be has also, driven a bit more caution around investment in the lithium space.
Yeah, I guess one of the things I was going to ask you about was, does this open a door for other industries like oil extraction industries to I guess get their foot into the lithium space, given the switch over from catalytic converters to EVs? Obviously, Darren Woods, one of the quotes I wanted to sort of run by you actually was Darren Woods, CEO of Exxon, the US largest oil producer, said that there's a lot of similarities between processing brine water to pull out lithium, and is very consistent with what occurs currently within Exxon's refinery and chemical plants. I mean, is that something that you see coming in as a new source of funds, maybe from the oil companies looking to diversify away from oil?
Yeah, so we have seen some investment from oil majors already into the lithium space. I think, that experience with specialty chemicals is definitely important because, as I said before with the mining majors, lithium isn't just about mining the material, it's about processing it into these actually very complex chemicals that, require extensive qualification periods. With cathode manufacturers, you need a consistent product, you need a product that's of good enough quality. So that kind of experience, I think, could really offer some value in terms of lithium supply and bringing that cash to the table as well. An awful lot of investment is needed to bring those 74 or around 60 mines if you've got that recycled supply online. And that's, where a lot of the world's cash lies. And we are starting to see that happen. There's been a few kind of joint ventures developed between kind of oil majors and cell manufacturers trying to develop lithium chemicals capacity. So there are movements there, but I think the lithium price needs to be strong enough to support that.
With you were talking about the cyclical nature of this industry, or I guess with lithium in particular, and one of the things that I've noticed over the last few years or last 10 years or so is that I guess we've had more cycles in lithium than we have maybe any other metal. I mean, we've probably had about 3 cycles when you actually look at the ups and downs in terms of the peaks and troughs since the 2010s, when other metals haven't even finished their cycle yet. And I guess why is that? And is that something that I get sort of similar to what you were saying? Is that something that probably puts the majors off a little bit in terms of that volatility?
I think with lithium, the demand for lithium and all battery raw materials is growing at a rate that you don't see in other industries. We're talking 25, 30% annual growth rates in terms of demand, more in some years. And that naturally is going to drive price rallies. But what it also means is that the market is a lot more sensitive to kind of any changes in sentiment. And that has also driven, kind of those troughs in pricing as well. If there's any kind of inkling that demand might not be as strong, even a 20% growth rate instead of 25%, and the market panics and the price comes down. I think also with lithium, so much of the market hinges on what's going on in kind of the Chinese domestic spot market. So lots of lithium is traded under contract. In fact, the vast majority is traded under contract. But the Chinese domestic spot market is the bellwether for what goes on with lithium pricing. And I think when you're trading a kind of critical raw material, a specialty chemical in such kind of a high intensity environment, that's going to feed into that volatility. There's lots of traders piling on, and that's kind of driving those cycles in pricing. Not to mention as well, those unconventional sources of supply that I mentioned, and the fact that that kind of marginal capacity is very reliant on a good lithium price and such a wide cost curve. We've got lithium that can be produced at $4,000 or $5,000 per ton, and then lithium that can be produced only at in the mid 20s. So that really drives these cycles, and when supply is cut off, prices can shoot back up, and when inventories build up, either with lithium producers or a bit further downstream with cathode manufacturers, cell manufacturers, the price can quite easily come back down. And yeah, I think that volatility, obviously, can draw some concerns for those looking to invest in the lithium space if they've previously been involved with commodities that act in kind of these bigger super cycles.
So I wanted to just touch on the OEM side of things and the battery manufacturers. There seems to be a lot of scarcity for offtake at the moment. We obviously saw LG Chemicals invest into Piedmont 75 million earlier this year. We had GM invest around 650 million into Lithium Americas. Is there a sense out there that the larger companies are a bit worried about where they'll be sourcing their lithium from? Is there a bit of, and I guess a lot of this is obviously North American based as well. Is there a sense of nationalism coming into the lithium market now?
I think a lot of kind of the forefront of OEMs and cell manufacturers' strategy at the moment is securing lithium supply. It's that idea of that being the constraining factor in terms of their electrification goals. Obviously, the lithium market has been very tight over the last couple of years, and getting that supply in place is so important for these downstream players. I guess the challenge for the OEMs is the decision between securing this supply from kind of existing incumbents in the lithium space and perhaps paying a little bit more for that material, maybe having to put down quite a significant prepayment, versus this kind of approach of going to juniors or going to project developers and sourcing the lithium before it's really even come to market. So there's a bit of a balance for the downstream to decide how they want to manage that risk, how they want to kind of deal with an offtake portfolio. You don't want to commit all of your cash to supply that might not even come online, but equally you want to guarantee that at least some of that supply will come to market, and you've got some lithium to actually move forward with, and kind of achieve your goals in terms of EV targets. So it's definitely a difficulty for them. And nationalization is kind of a whole new level to that. We've seen the Inflation Reduction Act in the US really incentivize sourcing localized supply of battery critical raw materials, lithium obviously being one of them. Lithium's perhaps in a slightly more comfortable position than some of the critical raw materials, because of some of the free trade agreements that the US has with certain lithium producing nations. But nonetheless, processing that lithium, actually producing cathode material, producing cells also unlocks some of those incentives from the IRA. So there's not only the push to secure the supply and decide how to balance that risk portfolio, but it's about securing that supply, ideally domestically, and if not from a country that the US has a free trade agreement with.
Just going back onto the cyclical nature of lithium, is that something that you foresee continuing even into 2030, 2040 and onwards?
I think lithium is much like any other raw material. There's going to be periods of time where the market's in more of a deficit, more of a surplus. And a lot of that kind of cyclical nature will depend on how much supply does successively come to market. At the same time, in terms of kind of small cycles, lithium, at least at the moment, is fairly seasonal in terms of its pricing. In the summer, domestic supply from China is quite good. There's very favorable evaporation rates. In the winter, there's less supply from China, and EV demand is the strongest. Those trends will probably kind of even out a little bit more as we go forwards, because supply will come from elsewhere. EV demand will probably be a bit more consistent year round. But there will always be, cycles in these critical raw materials or any raw material. But I think, volatility, in the really kind of long future, will calm down a little bit, as we see with kind of other raw materials.
Is part of that, I mean, in your head, what about things like direct lithium extraction? Will that help calm things down, especially in places like China and obviously South America? Has there been any advances in that type of technology at all over the last year or so? In my view, it's always been something that's promised a lot that hasn't quite yet delivered, right?
It really depends on the success of these technologies, we've not really seen pure direct lithium extraction commercialized. Obviously, that's a very umbrella term anyway, and kind of how the technology evolves will depend on where the breakthroughs are. I think the challenges with DLE in the current market are a lot of these technologies that are being developed are only really suitable for the asset that they're developed for.
Exactly.
So
Yeah.
the individual brine, the individual salar. If there's a major breakthrough for a DLE technology that can be applied, across the board, that would be fantastic for the lithium market. But you have to kind of take these things with a pinch of salt. And until we've seen proper commercialization of a technology that's DLE kind of through and through, we're a little bit conservative on that side of things.
Okay, good. And what about substitution of lithium-based batteries? I mean, obviously, a lot of the forecasts at the moment, I assume, are for normal NMC or lithium phosphate or whatever. So, I guess, in your view, obviously, benchmark analyze sort of all different technologies coming through. Is there any coming through at the moment? Any glimmers of something that could disrupt the market fairly substantially at all?
So we've seen some sodium ion announcements more recently. Quite a few kind of Chinese cell companies, Chinese automaker companies start to make some fairly significant sodium ion announcements. I think a lot of the success of sodium ion hinges on the lithium price.
Yeah.
If we maintain a really, really high lithium price, then sodium ion will do better because you need some competitiveness in the market when prices are high. But equally, we're fairly conservative about some of those announcements because they're kind of coming from players that don't have much to lose. They're not massive capacities, but lithium ion will, for the foreseeable future, still have a significant share of the market. Sodium ion might have its corner. Stationary energy storage, kind of lower end EVs, but we still see lithium ion kind of dominating.
And why is that? Is it more just the performance of lithium ion is better at the moment than sodium?
Essentially,
Yeah.
yeah. There's energy density considerations, and the fact that kind of the lightest batteries need to be those in kind of the longest range EVs.
Right.
At the moment, that's lithium ion where we're at. But energy density improvements are happening with sodium ion. But there's kind of a corner of the market for everything, and same with kind of solid state developments as well. That doesn't take away the pressure on lithium. In fact, if anything, it puts more pressure on lithium. But we're just talking about lithium metal instead. But there are kind of other technologies coming to the forefront. There's stuff happening on the anode side as well, and improving the anode with kind of silicon.
Yep.
So there are battery developments happening, but I wouldn't say any of them kind of put much of a dent in lithium demand.
Awesome. Okay. I guess to finish things off, the thing everyone wants to know most about is pricing. What can you tell us about the way that you're looking at lithium prices moving forward throughout, say, the rest of 2023 and then maybe even on to 2025?
Yeah, so kind of viewing more of a stable market this year, I think. As I said before, summer is a quieter period, or the first half of the year generally in the lithium market is a little bit quieter. EV demand is usually a little bit weaker in the first half of the year. There's that extra supply from the Qinghai brines in China with those kind of favorable evaporation rates. Heading into Q3, Q4, you usually see a bit of a stronger performance from lithium prices, and I wouldn't be surprised if that kind of seasonality, happens this year. Previous couple of years, it's kind of been squashed by massive price rallies. This year, I think the market it has probably returned a bit more to behaving how it usually would seasonally. So we might see prices, improve a little bit more through Q3 and Q4. But equally, we are seeing a little bit more of a balanced market in 2024 and 2025. So I think, lithium prices will hold strong. They might not hit those high highs of 2022, but, where prices are at now is still a very comfortable margin for producers. And I think what we saw at the beginning of the year with prices quite quickly rebounding when they did drop below that kind of 30,000 mark is an indication of what's to come. The market is set to be a bit more balanced, but it's not, a major swing into a massive surplus. There's still, a lot of supply kind of teetering on the edge of that, and stronger prices are going to have to support that supply if the market is going to be more balanced. So the view is one of probably a bit more stability and slightly less volatility. But with the way the lithium market's performed over the last couple of years, I'd if I could see the future, I would be a billionaire.
Good. Me too, I guess.
Yeah.
No, Daisy, thank you very much for your time.
Thank you.